Hello again and welcome. This is Robert Schein, Managing Director and Partner at Blanke Schein Wealth Management. Today is May 3rd, 2022, and markets are moving, so we're going to discuss what's moving markets, what you should be paying attention to, because we are too. So thanks for watching. So right now, we're at the two-day meeting, starting today, ending tomorrow, with the Federal Reserve, talking about it. Well, they're done talking about it. They're actually going to hopefully raise interest rates as they should, as we've been watching the 10-year Treasury at 3%, just broke 3% for the first time in quite some time yesterday. And we have some relief rally in place both yesterday and today. We'll see if that continues as the Federal Reserve starts their two-day meeting today and then concludes with the results, and then obviously the subsequent conference call or the press briefing, if you will. And that could change markets. Usually markets are extremely sort of mellow prior to the Wednesday morning announcement. And then as soon as Federal Reserve Chairman Jerome Powell starts talking about it in the press conference, sort of the indications inside the room, what the Federal Reserve sort of board is trying to determine right now. And ultimately what they're talking about is what every S&P company is talking about right now. We've had just a barrage of earnings. We're almost through earnings season right now. We have 275 of the S&P 500 corporations just reported out of the 500 for the S&P. And you know what? Miraculously, the reporting scorecard, I'll show it to you real quick. It is all green. By that I mean companies are meeting and beating expectations in every sector. So all 11 sectors of the S&P 500. But if you look at the S&P 500 right now, we were coming into an estimate of 7.3%. That got revised up in terms of earnings because we were looking at a 6.6%. Now we're squarely in. If you add in all the S&P sectors together, obviously some did better than others, like energy did better than technology, but we're at a double-digit earnings growth right now for the first quarter of 2022. Now, who would have thought, and why are the markets down? I mean, that's the number one question. And the number one reason why the markets are down is because the word inflation, it's a dirty word right now. And the reason, if you look into all that have reported the 275, just about every single conference call have cited, obviously, a slowdown, geopolitical events. Those are sort of, the obvious, but the major one are the input costs, right? The supply chain disruption, the increased wage inflation, inflation of just goods and services that they may or may not be able to pass on to the consumer. The word is inflation, and it's the ugly word because you have inflation rate about 8.5% right now in the US, and the Federal Reserve has 25 basis points on the Fed fund rate, and the 10-year Treasury is at 3% saying, hey guys, hey Fed, we need to raise interest rates and we have to get a little bit closer. So right now we have a total of 10 basis or rate hikes in place. That should bring us to the 3% mark. But we don't know if we're going to get the Fed funds all the way there. And I don't think the Federal Reserve knows. They're going to go meeting by meeting, but we're going to start tomorrow with another 50 basis point raise of the Fed funds rate. That should take us to 275. And then subsequently in June, we could see a 50 or even a 75. So that's going to get us closer to 1.5 to 125, depending upon what they choose to do. All the while, there's still that gap and that spread of you have to ultimately, to curb inflation and stop inflation or slow inflation, you have to get interest rates below what essentially slowing the economy, what the 10-year Treasury is really showing us. And what do we watch for after the Fed? Well, what the Fed's going to be watching for is what we should be paying attention to, is definitely what markets are paying attention to. The next the next economic reports from the month of May to June, their next Fed meeting. It's the PMI, the IMS manufacturing, and obviously housing numbers. We're going to see if housing continues to sort of slow or temper its pace right now because it's extremely out of control. And ultimately, the Federal Reserve has to tame the beast of inflation right now, as reported by everybody, you and I on the kitchen table, but obviously that we're seeing it in the corporation's earnings reports, because the labor market right now, that's their number one issue. Their number one issue inflation's number one issue. The jobs market a few years ago, getting people employed, back to employment, it was their number one issue. Well, the market and the economy and corporations and you and I, by spending, we've done it, because corporations right now, the JOLTS report came out. It's basically a jobs opening number. And basically they said there's 11.5 million jobs open, and there's only about 5.6 million average workers. So we've got a 2 to 1 coverage ratio, meaning 2 jobs for every 1 person out there in the U.S. economy. That's a major, major problem because that's also increasing inflation, wage inflation, especially for employers. So the Federal Reserve's got its job, its hands full for this job. And the real question is, our good friend Warren Buffett, Berkshire Hathaway, just had their in-person sort of annual meeting, and the Oracle Omaha basically says, not only did the company have contraction earnings, so if you look at the earnings report, they were down year over year 53% from a year ago, and that wasn't good. That wasn't a good report. But they also had a cash hoard of $140 billion. In this last quarter, what would Warren Buffett do? Well, he's going to buy when everyone else is selling. And in fact, we saw a lot of selling this last quarter. And what did he do? He basically spent about $40 billion into acquiring a couple of companies out there and also putting more cash to work. There's a lot more S&P companies he likes as well. He just says he's just waiting for the right time. Now, we don't know if he actually put money to work in the last couple of weeks because markets have been crazy. But the reality is that somebody's been buying when everyone else has been selling. So right now, this is a what would Warren Buffett do type of market, as we call it, because he sees tremendous value out there. And so what we also look at is, are corporations making money? And they are. Is the inflation going to eat into future earnings potential? That's the unknown, and that's the fear. And we have to wait and see for some of these earnings reports, or beyond the earnings reports, for all this economic data to filter in to say, hey, is there going to be inflation easing? Therefore, this number right here for corporations, we could see markets by the back half of this year, once we get some clarity, some certainty on some of this inflationary data. Maybe it's not so hot as we thought, or maybe it continues to take off. But commodities have come down a little bit. And so that could give us an indication that we could see inflation moderate. Hopefully, we need that sooner than later. If anybody, the Fed needs it as of ASAP. But, this is a what would Warren Buffett do type market. And he's still going strong in his 80s, and Charlie Munger in his high 90s. And those guys are still putting money to work in the markets. And God bless them. So that's pretty awesome to see. That's our update for today. Thank you for watching. We'll see you again next time.